We have stocks trending to the upside here. The Dow up just over 100 points in the first 15 minutes of trading. The rally that we have seen in equities may be overshot. Now, that's according to a new note out from HSBC. The analysts there forecasting a temporary pause in the recent rally, warning that valuations look vulnerable to any upside surprises that we could see in inflation. Remember, we'll get that CPI print tomorrow morning. So is the risk reward setup looking a bit less attractive? We want to bring in Steve Sosnick. He's Interactive Brokers chief strategist here to break that down and much more. Steve, let's start with that valuation call, maybe the brief pullback that we've seen in the markets since the start of the year. In terms of what we'll get tomorrow from the inflation number, do you think valuations, if we see any sort of upside surprise, how do you expect the market to react?
It's as though he and I wrote the same note about the same time, because that's pretty much in the notes that I sent over to you guys. I feel that tomorrow's CPI number is a bit of an asymmetric risk. I think a good number, or even a better than expected number, is largely priced in. Think of the move we had, I called it weaponized FOMO into the last 2 months of the year, of just that rally we had, and there's a lot of good news priced in. I don't think that an upside surprise in inflation is priced in right now. I don't have a crystal ball as to what to expect, but in terms of being prepared for what to expect, I think the risks are a little asymmetric going into tomorrow's number. Does tomorrow's number even move the dial for the Fed? Do you think they see the print and say, oh, this entirely changes the tenor at our next meeting? No, I think unless the number is way out of line. But let's talk about it. I like to look at the monthly numbers, because the yearly numbers have 11 months of data we already know, as opposed to the 1 month we don't. So let's focus on the 1 month we don't. The core is expected to go up by 0.3. Well, that annualizes out to 3.6%. If you do a 3 month annualized number, it's a little bit lower. It's about 3.2%, which a lot of people like to do. But that's still above 2. It's the right direction. It's a good thing for us, but it doesn't necessarily move the needle in a huge way. I think the Fed wants to see sustained 2% inflation, not just a blip here and there. And so unless it's really way out of line in either direction, I think plus or minus 0.1 here or there is not going to be a huge determinant for the Fed.
Steve, looking past tomorrow's inflation print, looking ahead to earnings season, do you think earnings are going to be the catalyst that the markets have been waiting for in terms of resuming that upside trend?
Yes, as long as there's no negative reinforcement in terms of guidance and stuff. Yeah. I'm on record various times as not loving the fact that banks come first. I think they're very idiosyncratic. No one else relies on trading profits. No one else is that interest rate specific. But we can hopefully learn something from the conference calls. Are the Brian Moynahans and Jamie Dimons of the world saying their customers are borrowing money, not borrowing money, et cetera, et cetera. But in terms of setting the tone, I don't want to overread Friday's numbers into it. I think we need to get a little more into the meat of earnings season, which will be next week and beyond. Mm-hmm.
We got to talk about this spot Bitcoin ETF with you, Steve, because this is going to be watched here today. We're also going to be seeing if it actually moves the dial for investors' strategies out there. A more risky asset that they had the opportunity to get into in multiple different facets before, but now in an ETF form. What's the delta here?
The question is, I think the only thing that really moves the needle is, do you start to see like RIAs and other sort of wealth managers who do a lot of equity stuff, who maybe haven't been willing to go out there and buy Bitcoin, let's say via a Coinbase or something, will now be able to go out there and buy a wrapper that allows you to buy Bitcoin that are held at Coinbase, which is really what you think about is going on. And so can it move the needle? Yes. I was on record as saying this was a buy the rumor, sell the news event. I put out a piece on Monday that said that. And sure enough, we declined in the immediate aftermath of the fake news yesterday. And let's see what happens. I think there's some definite overhang. There's going to, also remember there's FTX, the FTX bankruptcy estate is actually a big holder of the Bitcoin trust, the Grayscale Bitcoin Trust. And I have to wonder if they're waiting for that to become an ETF so they could just redeem it and sell the Bitcoins themselves. So that's a potential overhang. So the question is, are people racing to rush in? Is there huge fear of missing out of this Bitcoin rally? Probably some. It's human nature. But then the question is there a real institutional take-up of this product? And that remains to be seen. I think it's incrementally good for demand, but I don't know that the run-up that we've seen is justified the incremental demand.
Yeah, Steve, at the top of the hour, Julie Hyman was on with us talking about a conversation that the two of you had over the last several days, just about investors and weighing whether or not an investment like this in terms of a spot Bitcoin ETF would make sense for them to add to their portfolio, assessing that risk. What is the 2 or 3 things that you think investors need to keep in mind when they're assessing whether or not an investment product like this makes sense for them to add to their portfolio?
The most important thing, Shauna, is to remember what level of volatility can you accept? Right? I mean, in the last couple of days, Bitcoin's moved 4% up and down, basically. That's way more volatile than pretty much anything you can invest in. And so that combination of, you have to think of this as almost gambling money. I don't mean to say that Bitcoin is a gamble, but you have to be willing to have big drawdowns, and it better be money that you don't necessarily need tomorrow. The other thing to keep in mind is, if you haven't been invested in crypto now, is this the reason for you to come into it? Just after this rally, or and so that timing may be another aspect that's very important.
If there's, and I'll switch, and we'll end you off of Bitcoin for one moment here. Yes. What is the one way that you would describe? How would you perhaps, anticipate or describe the anticipation for this earnings season? If there's one theme that you expect to emerge this earnings season.
To me, we have to resolve the conflict between having a soft landing that's good enough to allow us to have solid earnings growth, and therefore only requiring 3 to 4 rate cuts, versus an economy that's dire enough to require 5 to 6 rate cuts. And let's see what the companies say. Obviously, I think most of us should be rooting for a good enough economy, but that would mean that we have to adjust our rate cut expectations, and the bond market will have to adjust. And that will really be the key. That's why I think the guidance from the companies will be pretty much as important as the actual numbers themselves, at least for this cycle, and possibly the next one as well.
Steve, great to have you here in studio with us, and thanks so much for taking the time here on the day.
My pleasure as always, Brad.
Absolutely. Interactive Brokers, Steve Sosnick here on set.